So this is Mike with Jeremy, and we're playing this game, and this is called interest rate
Roulette.
roulette. Yeah. Did you get shocked?
No. Yes.
Oh,
No.
well, let's try it again.
I pushed the button. I think I may have pushed early though.
I think I did too. But don't you get shocked if you
I
push
thought
early?
so. But I didn't get shocked.
So this is interest rate roulette. And so with interest rates. Oh yeah, okay. Ow.
So I
Ah.
win.
I think I turned it up all the way. Dang. Okay.
I thought it was just the volume we were turning
You
up.
win. Okay, so I'm with Jeremy Blozic here today, and we're talking about interest rates. And so, are you shocked the way I'm shocked about what's going on with interest rates? Jeremy, are you shocked?
Well, yeah, we knew that the Fed was going to raise rates methodically this year, but we saw mortgage rates come up like 1.5 points ahead of time because everyone knew that they were going to raise rates.
They
And then
were
this last
anticipating.
weekend,
And they just okay,
they went up another 0.5 point.
yeah. Well, but that's not all bad news, right? There's some
Not
silver
for the
lining.
banks.
Yeah, not for the banks. Okay, so but there's some silver lining for buyers and sellers still,
Yeah.
because people still need to buy and sell. And so some of the silver linings that's happening right now is that there's not as many buyers out there. If you're a seller, you won't get 30 offers. You might get 1 or 2 offers. And as a buyer, and so that's good. You've got more. There's more inventory coming on the market. That's good as a buyer. But also as a buyer, you might be able to negotiate some closing costs in there.
And you won't have to make an offer on a house without actually seeing it first.
That's true. Yeah, that's right. You can actually go to the house, go through it, take your time,
Yeah.
and make sure that it fits your family's needs. Because I mean, last year it was such a feeding frenzy. I mean, there were people buying homes that I know didn't fit their needs. They just needed a roof over their heads. And so it's not going that way now. So as a buyer, you've got more inventory and things to look at. Seller, you still have that equity that you can play with. You can give some of those concessions to a buyer, right? To help buy down the rate.
Yeah, make you feel like a nice guy.
Yeah,
Or
or be a
girl.
nice guy. Or, yeah. And so, are there any new loan programs that are coming out to help with this rise in the interest rates? Yeah.
No.
No.
In fact, a lot of times when rates start coming up, right, we people move from a fixed rate, something's
Right.
fixed for 30 years, to an ARM because ARMs are generally cheaper. But right now, because that yield spread curve is really flat, meaning if you invest money into the government for 2 years or 10 years, it's essentially the same rate.
Okay.
And so there's really no benefit to ARMs. In fact, ARMs right now are more expensive than a 30-year fix.
Than the 30-year
I will
fix.
tell you the good thing is the government just raised the first-time homebuyer income levels. They're still abnormally low. They were about 63,000. They went to 72,000.
Okay.
So if you make less than $72,000 and you can still qualify for a house, you'll get a little bit better interest rate and a deal on your mortgage insurance, and it's only 3% down.
Well, and that's great, because that's really who we want to try to help in this market is the first-time home buyers. I mean, homes have gone up so high, and their wages haven't gone up to cover that. But we want to help the first-time home buyers, get them into a home. Don't wait to buy real estate. Buy real estate and wait, right? Isn't that what they say?
Yeah.
You like that?
I've never heard that. Did
Really?
you make that up?
I didn't, but I'll take credit for it.
That was
today.
good.
Another thing is,
Can I say one thing?
Yeah.
So that you bring up a really good point. Some people are worried about a price reduction, like values are going to come down 5% next year. I don't know if that will happen. But if they come down 5% next year, they'll go up 5 or 10% the following year. So
That's right.
you buy real estate and you wait, and in 10 years your house has doubled in price anyway.
That's right.
So you find the house that fits your needs, and then you move on.
I mean, yeah, you're either renting a place that doesn't fit your needs, possibly. Buy a home that fits your needs for now, because you're always changing. Your needs are
Totally.
always changing, right? Another thing I wanted to talk to you about is assumable loans. Were there some assumable loans out there?
Yeah.
I mean, what, VA
All government
loans?
loans, VA loans, and FHA loans are both assumable.
Okay, so if you had an assumable loan, an FHA loan 3 years ago, and it's 3%,
Yeah.
and you want to sell your home now, don't pass that opportunity up to say, hey, I've got a fully assumable loan here. You're going to have to come up with some cash to cover the equity or
Yeah.
part of it, right?
But you could conceivably charge a little bit higher price as a seller with a really good interest rate.
Yeah, so that's some things that can happen there. So don't let that escape either as a seller or a buyer. So what else can we talk about today? I think that's...
Let's play that game again.
No, let's not. Let's not play that game again. I think
I'm good.
you're good then. Okay. Well, my mom always wanted me to have curly hair, and so maybe that'll help. But man, I think I pushed the wrong button there. I think I turned it up all the way.
Thanks for
We won't
doing
be doing that again. Yeah, I took one for you. So, but thanks again, and we'll talk again about what interest rates are doing, what the forecast is, what the market is, and so. This has been Mike and Jeremy. Talk to you later.